You know how we're all taught to trade our time for money, right? For years, that was my life. And honestly, I was burning out. I felt completely stuck in that cycle. Work, get paid, pay the bills, and then do it all over again. It felt like I was running on a treadmill, never actually getting anywhere. I hit a point where I knew if I wanted real freedom, the kind of freedom to travel, to rest, to actually live my life, I couldn't be the only one doing the work. My money had to start working for me, especially while I was sleeping. That's when I went all in on building a portfolio of incredible companies that pay me just for owning a piece of them. So in this video, I'm pulling back the curtain on the exact 7-stock portfolio I built that generates income for me 24/7, whether I'm at my desk, on a beach, or completely passed out. The why? My journey to passive income. Now, before I give you the list, we must talk about the why behind it. This isn't about get-rich-quick schemes or gambling on risky stocks. This is about building a reliable passive income machine. One that puts money into your account month after month, just because you own a small slice of a fantastic business. And that, my friends, is the power of dividend investing. When you buy a share of a dividend-paying company, you're a part owner. And as an owner, you get your cut of the profits. That cut is called a dividend. It's real cash, and it's the entire foundation of this strategy. I want you to think of it like a dividend snowball. At first, those dividend payments seem tiny, right? Almost not worth it. But you take that cash and you reinvest it to buy more shares. Suddenly, you own more of the company, so your next dividend check is bigger. That bigger check buys even more shares, and you can see where this is going. Over time, that tiny snowball rolls downhill, picking up speed and size, creating a compounding machine that builds your wealth on autopilot. Shifting my mindset from chasing a paycheck to building assets that pay me was the single most important financial move I've ever made. But it all comes down to picking the right companies. You can't just throw a dart at any stock with a high dividend. You need quality. You need businesses that have proven they can win year after year through every kind of market. And that brings me to my portfolio. All right, before we get to the stocks, I've got to say the obligatory disclaimer. I am not your financial advisor, and this is just for entertainment and education. Always do your homework before investing your hard-earned money. Okay, with that out of the way, let's get into it. The 7 stocks that pay me to sleep. I specifically chose these 7 companies from different parts of the economy to make sure I was diversified. That's just a fancy way of saying I don't have all my eggs in one basket. For each stock, I'll tell you what they do, why their dividend history is so incredible, and why they've earned a permanent spot in my portfolio. Stock 1, the bedrock, Procter Gamble PG. First up is the definition of a blue chip stock. Procter Gamble. If you don't recognize the name, you'll recognize their brands. Tide, Crest, Pampers, Gillette. They make things we all have to buy, whether the economy is booming or busting. That makes for an unbelievably resilient business, which is exactly what you want. Their dividend record is just staggering. P&G has paid a dividend for over 130 years and has increased that dividend for 68 years straight. That makes them a dividend king, which is a title reserved for companies with 50-plus years of dividend hikes. Forward dividend yield, 2.81%. 5-year dividend growth rate, 6.07%. Consecutive dividend growth, 68 years. P&G is in my portfolio because it's the definition of stability. The yield isn't going to make you a millionaire overnight, but its rock-solid consistency is what lets me sleep peacefully, knowing my foundation is secure. Stock 2, the tech titan, Microsoft, MSFT. A lot of people think dividend stocks are just old, slow-moving companies. Microsoft completely shatters that myth. This company has the explosive growth of its Azure cloud business and all its AI work, but it's also deeply committed to paying its shareholders. Microsoft has been raising its dividend for over 20 years. And while the starting yield might look low, its dividend growth rate is where the real story is. This is what we call a dividend growth stock. The income you get today is just the starting line. The real magic is how fast that income grows year after year. Forward dividend yield, 0.63%. 5-year dividend growth rate, 10.21%. Consecutive dividend growth, 23 years. Microsoft is proof that you don't have to pick between growth stocks and dividend stocks. You can have both. It's the engine of the modern economy, and they make sure to reward their shareholders for being along for the ride. Stock 3, the healthcare giant, Johnson & Johnson, J&J. Just like P&G, Johnson & Johnson is another dividend king that's essential to our daily lives. From life-saving drugs to medical devices, its business is woven into the fabric of global healthcare. It's a defensive play because, let's face it, people need healthcare no matter what the stock market is doing. J&J has one of the most incredible track records out there, raising its dividend for 63 consecutive years. That streak has survived recessions, crashes, and global pandemics. That is a level of reliability that's hard to find anywhere else. Forward dividend yield, 3.11%. 5-year dividend growth rate, 5.40%. Consecutive dividend growth, 63 years. With that kind of fortress-like stability, J&J is an absolute cornerstone for my entire strategy. Stock 4, the monthly money machine, Realty Income O. This next one is a huge favorite in the dividend world, and for a very simple reason. It pays you every single month. Realty Income even trademarked the nickname the Monthly Dividend Company. It's a type of company called a REIT, or Real Estate Investment Trust. Basically, it owns thousands of buildings and rents them out to reliable businesses like Walgreens, 7-Eleven, and Dollar General. This creates a super predictable fire hose of cash, which it then passes right along to its shareholders. Every single month. It's also a dividend aristocrat with over 25 years of consecutive dividend increases. Forward dividend yield, 5.71%. 5-year dividend growth rate, 2.93%. Consecutive dividend growth, 25 years. That higher yield and the monthly payout make this a cash flow superstar. It's the one that feels the most like a real, tangible paycheck hitting your account every 30 days. Stock 5, the powerhouse, NextEra Energy, NE. You simply can't run a modern world without electricity, and NextEra is an absolute leader here. It's one of America's largest utility companies, but more importantly, it's the world's #1 generator of renewable energy from wind and solar. This gives it a powerful 1-2 punch. The safety of a classic utility company and the massive growth potential of the clean energy revolution. This has allowed NE to not just pay a dividend, but to grow it at a speed that's almost unheard of for a utility. They're sitting on 29 years of dividend growth. Forward dividend yield, 3.22%. 5-year dividend growth rate, 10-40%. Consecutive dividend growth, 29 years. I love NE because it's the perfect blend of old-school stability and future-focused growth. It powers our world today, and it's building the energy grid of tomorrow. Stock 6, the home improvement king, Lowe's. Lowe's is an absolute giant in the home improvement world. Home ownership is a pillar of the economy, and whether people are renovating their kitchen, fixing a leaky pipe, or planting a garden, Lowe's is where they go. But the truly mind-blowing thing about Lowe's is its dividend. It's another dividend king, having paid shareholders more money for over 50 years straight. What sets it apart, though, is how aggressively it grows that dividend. We're talking double-digit percentage hikes. Forward dividend yield, 2.12%. 5-year dividend growth rate, 18.60%. Consecutive dividend growth, 53 years. Think about that. A 50-plus year track record of paying you more every single year combined with huge dividend hikes. That's a rare beast, and it's an absolute compounding monster in this portfolio. Stock 7, the financial fortress, JP Morgan Chase, JPM. To wrap it all up, you need a piece of the financial sector, the bloodstream of the entire economy. And JP Morgan Chase is the biggest and arguably one of the best-run banks in the world. Now, bank stocks can go up and down with the economy, but a leader like JPM has the size and the different business lines to handle the rough patches. Since the 2008 crisis, the company has transformed into a fortress of stability and has put together a solid 14-year streak of dividend growth. Forward dividend yield, 1.87%. 5-year dividend growth rate, 8.04%. Consecutive dividend growth, 14 years. JPM adds crucial financial diversification. It's the final essential piece of this sleep money puzzle. The 3 biggest mistakes to avoid. Building a portfolio like this is half the battle. The other half is protecting it. So here are the 3 mistakes I see people make all the time that can destroy their progress. Mistake 1, chasing a high yield. It is so tempting. You see a stock with an 8% or 10% dividend and think you've struck gold. But look, if you see a yield that high, your first thought shouldn't be jackpot. It should be what's wrong. An unusually high yield is often a massive red flag that the company is in trouble and the stock price has tanked. Right before they're forced to cut the dividend. The goal isn't the highest yield today, it's a safe and growing yield for decades. Mistake 2, not reinvesting your dividends. When that dividend cash hits your account, you might be tempted to spend it. But if you're still building your wealth, just taking the cash is one of the biggest mistakes you can make. You're robbing yourself of the magic of compounding we talked about. Set up a DRIP, a dividend reinvestment plan, and put that snowball on autopilot. Every dividend buys more shares, which earn you more dividends. It's the simplest secret to building real wealth over time. Mistake 3, forgetting to monitor your holdings. Finally, please don't think this is a set it and forget it forever deal. It's set it and check on it a couple of times a year. You're a business owner now. You have to at least pop the hood once or twice a year to make sure the companies are still healthy and the reasons you bought them still hold. A company with a 60-year dividend streak isn't going to collapse overnight, but ignoring your investments completely isn't smart. It's just lazy. So, there you have it. Those are the 7 stocks that form the core of my passive income machine. Remember, this isn't just a random list of stocks. It's a blueprint for buying back your time. It's a plan to build a machine that works for you around the clock, so you don't have to. Your journey can start with just one share. It can start with that very first dividend payment, no matter how small it is. It all starts with the decision to make your money work for you, not the other way around. If you got any value out of this at all, it would mean the world to me if you hit that like button. It does help the channel. And if you want more videos on building passive income and reaching financial freedom, make sure you subscribe and ring that bell so you don't miss what's next. And finally, I want to hear from you. What are some of your favorite dividend stocks? Drop them in the comments below. Thanks for watching, and I'll see you in the next one.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.